Do you want to uncover 3 simple stock trading tactics that could 10x your potential in these markets?
What? It's so loud. What? I can't hear you. The music's too loud. I can't hear you. The music's too loud. Hey, good morning, everybody. Welcome to a new year. Holy smokes, we made it to 2021. Great. Ring a bell. You got the 3-second rule, right? Great. You ring a bell, then sit down, shut up, and get ready for the next trade. So let's get ready for the next year. what are we going to do today? Technical and fundamental analysis. If you want to get rich quick, this is not the right place. But if you want to be a better Forex trader, learn how to use logic and common sense to your trading, then you are in the right place. So without further ado, we're going to do technical analysis. We're going to go through the calendar. We're going to look at some day trades, some swing trades, some carry trades. Get ready for tomorrow's big event, and then there's another big event coming in a few weeks. We can talk about all these things and whatever else is on your mind. So let's get on with it. Boom! So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Guten Morgen. My name is Wayne McDonald. I'm a currency trader. Been a currency trader a very long time. I have a bachelor's degree in macroeconomics and a master's degree in financial management. 20 years of trading experience. Great. Cool. Nice. So you can ask me questions about technical and fundamental analysis. Wow, that's a little much today, huh? So let's look at some day trades and some swing trades and some position trades. But before we do that, let's start with the calendar. So ask questions, get involved, take notes, and then document the things you learned, your key takeaways from today. Document them in the comments or in the in the comments section below the recording. Okay? Don't just lurk. Don't just sit here. Try to document what are the key takeaways. 1, 2, and 3. There must be something. If there isn't a key takeaway, then you didn't ask the right questions. You're the boss. Okay? So write down key things and then document them in the recordings. Okay, in the comment section of the recordings, because when you're on YouTube, you can search the comments that you left and find out the specific things. So you're creating a repository, but also if you are in this stream looking for key takeaways, then you will find them, or you'll influence the stream so that you'll learn something. And that's the whole reason. This isn't entertainment per se, right? So you got to come in here with intent. And then document that. Also, hey, while you're at it, click the like button. It'd be great. Okay? What else? Why don't you visit tradersway.com? These webinars do not cost you money, but they do come with an obligation. Visit tradersway.com and open up a demo account. That's it. It's not a big deal. It doesn't take a lot of time. Why would you want that? Well, you're a trader. They're a broker. They have fast execution speed, world-class customer service, small fees, big swaps. These are the things that you want. Hey, if you don't believe me, it's fine. But you do need to visit tradersway.com, open up a demo account, and give them an opportunity to earn your loyalty and respect. Pretty simple. So thank you, Tradersway, and thank you to you for being on my team. And I'm looking forward to a great 2021 with you. This is what, the 15th year that I've been doing videos on YouTube. 15 years? It's crazy, right? It's crazy, right? Something like that. I was a beta tester. Okay? When I was uploading videos to YouTube, Google didn't own it yet. All right. This is Forex.Today, the mothership, so to speak. Yeah, you could actually type in Forex.Today and there's a website, believe it or not. Pretty amazing. Okay. Looks like I have to update this. Sorry, there's 17,000 people in our community. This says 14,000, so I need to update that, but I wanted to start by going through the calendar. Thank you, Benny. Okay, OPEC meeting. So this is interesting. Why is this OPEC meeting unique? Let's make sure everybody's on the clue train. Do they typically meet this week? Daniel says, are pivot points predicting the value of a trade? No. They're using a form of standard deviation to measure based on the past period, whatever period you're measuring, the future highs and lows. Okay? So think of it as standard deviation type tools. Okay? It's not predicting anything. It's just telling you. Yeah, it's just math, right? Okay. All right. So anyways, what is different about this OPEC meeting than every other OPEC meeting ever done? Type in a question mark if you have no idea. Production cut, Leo, if that were the case, that would not be different from every other OPEC meeting ever done. Okay? Thank you for the question marks, guys. See, they used to meet, I think, just 2 times a year, right? OPEC and OPEC Plus. They would only meet a couple times a year. This is a beginning of a new strategy. They're going to meet monthly now. Isn't that interesting? Because they realize, oh my God, we need to keep our thumb on the pulse a little bit more. So this is a monthly meeting, which has never really occurred before. So that's kind of interesting. And they're actually thinking about adding to supply because they've been cutting back so much. And if they are, it's kind of interesting. Oil might behave one way. Let's say if they add supply, then oil comes down a bit. But they're also then, if they are adding oil, they're saying a couple of things. One, there are countries in this world that cannot survive without selling oil. Saudi Arabia might be one. Russia could be another, right? Libya, Venezuela. So they might just say, okay, look, we know you're going to bring oil prices down by doing this, but we understand you need to sell something, right? That would be a sign of weakness, right? Or you interpret this as there's increasing demand globally, and they see it. And that increase in demand would be a sign of recovery, global recovery. So the market might interpret this one way or another. So make sure you think about it and interpret your way. Cool. Aussie. Where's the one I wanted to show you? Is it here? I thought there was import-export data out of Australia. I thought it was coming up. I don't see it here. So it might just be not on this calendar. Oops. Next week, maybe? No, interesting. Somewhere in here, I think Australia is releasing import-export data. That's all. Okay? So if that's true, pay attention in there. There's a lot of PMI stuff early in the month, making up for late reporting last month. Like, for example, okay, now I don't think this is what I thought, too. Interesting. Correct me if I'm wrong, but I think tomorrow we get ISM services and manufacturing tomorrow. right? It's not here. Friday. Like this calendar doesn't have, it just says ISM manufacturing, and then there's no ISM services, right? I think they both come out at the same time tomorrow. Does anybody know, or is it just me disagreeing with the calendar printed in front of me? What an arrogant a-hole, right? It's printed on the calendar. Well, it's still wrong, right? I thought ISM services and manufacturing both come out tomorrow. Okay, and Leo says the Aussie import-export is on Wednesday. Building permits here. So it doesn't say it. It should be in here. So anyways, these are the things on my mind. So maybe that's the best education ever to say it's not what I see here, but I'll tell you what's on my mind. Kevin says I see ISM, but I'm saying which one. Okay? This says ISM manufacturing. I'm more interested in ISM services. They don't typically come out on the same day, but I think tomorrow they both come out on the same day. Okay? So you guys can't just say ISM. Which ISM? Okay. All right. So anyways, if that's true, that's cool, interesting. Unemployment rate coming out of Germany. Okay, so that's going to be interesting. Okay, especially if you trade the euro. Williams is speaking. Great. There's a speech coming up in a couple of weeks out of the Fed. It won't be on the calendar, but I was on the Federal Reserve Bank's website going through their calendar, and there's something coming up next week. I forget what it is, but I think it's like they literally explain their monetary policy. Could be interesting for a Forex trader, right? Okay, both of you guys say you don't see services. Okay. Okay, well, it's out there somewhere. Yeah, see? It's not on Friday. Yeah, well, maybe I'm right and it just doesn't show it here. You see it on Thursday? Okay, I don't see it here. Okay, well, cool. If it's Thursday, then great. We still need that. That's the important one, is the other thing I'm trying to tell you. 70% of the economy is services related, so that's the one we care about. All right, cool. Going on to Wednesday, ADP. Okay, ADP, another dumb prediction, but it is a scalping event. If you like to scalp, this one is usually good. Oh, they consider it low? You're kidding me, Jim. Wow, really? It's like one of the most important things out there. So I said it should come out Tuesday, right? ISM manufacturing, but it's not here. So you guys say it comes out Thursday, which is fine. I don't know why you'd wait 2 days to issue it. Okay. No. No, I don't see it. Still, I don't see it. Well, maybe I'm having a brain fart, but I don't see it. Anyways, cool. It is definitely not a low impact. Okay. On medium news, yeah. So anyways, cool. I'll figure it out. We'll be there, right? Just trying to point out that that is important, and it's not on this calendar, but it is important. Okay. Cool. So anyways, ADP is a great scalping opportunity. FOMC median minutes is a great part of your fundamental analysis. So this would be something that you would download and read. Okay. Is anybody going to make a declaration that you're actually going to download it? Yes, non-manufacturing is services. Yes, Leo. Okay. Ben is making a declaration. Thank you, Ben. Who else is going to declare their intent to actually download that report and read it? Okay. Yes, quite a few. Right on. Okay. Excellent. Excelente. You guys are golden. Cool. So ADP, great scalping opportunity. FOMC median minutes, great opportunity to do research and be knowledgeable. Just imagine you only do it so if you meet with a potential client, you can tell them that that's what you did. It sounds strange, but that may be the most important reason for doing it. Because you probably won't learn anything radically new, but you'll see what they're talking about. You'll see the concerns. It'll help you be an expert. But if you suddenly got called on to Bloomberg television tomorrow, you could talk about it, right? You could, if you bumped into a potential client to invest into your Forex fund, it's something that you could mention. Oh, you just downloaded the FOMC meeting minutes, and as you're reading, you notice something interesting, and you think it could really impact the way the markets go in 2021. Because remember, when you meet someone, they might be intrigued about what Forex is. They're like, oh, you're a Forex trader? That's so cool. But what they know is the stock market. Okay? So inherently, whenever they ask you what you think of something, now they might say, well, do you buy the Iraqi dinar? No, I don't. But they're probably going to ask you something about Bitcoin. So you might say something about that, but they're also very interested in the stock market. They might be very interested in gold. So you can say, well, oh, you like gold? Well, I just read the FOMC meeting minutes, and in there they discussed what, the potential for their monetary policy in 2021. And let me just tell you how this would impact gold. And all of a sudden you got a potential client right then and there. Because you've done something that most people are unwilling or incapable of doing, and that is actually reading the FOMC meeting minutes. Because they may not even know what that is, so you have to say the Fed. Okay, cool. All right. Jobless claims, great. They're often provides a little bit of volatility. Trade balance. Okay, these are negative numbers, negative 64 versus negative 63. What do I want to see? You tell me. What do I want to see? Do I want to see a less losing number, less negative? Do I want to see negative 65 or negative 55? What's better? You see, either way, they're negative numbers, but do I want to see more negative or less negative? Which is really funny, right? Why do I want to see that? Because if you read the newspaper, they talk about the deficit, in this case, the trade deficit, the trade balance with Japan, the trade balance with China. Okay? What this tells us is that Americans are buying stuff from foreigners. Okay? Now remember, when things are bad, if you just got fired or you're afraid you're going to be laid off and lose your job, then you're thinking, well, how am I going to pay my mortgage? How am I going to pay my rent? So do you go out and buy a brand new Samsung 4K TV if you think you're going to lose you feel like you really could lose your job in the next week or two? What's the psychology going on? If you're worried about the future or you're in a world of hurt right now, do you buy a 70... I was just at Walmart the other day, which is funny because I don't go to Walmart, but I was intrigued. I'm like, I was like a kid. Did you know you can buy giant burritos? They're not even frozen burritos, but they're prepackaged burritos. You can buy these giant burritos, twice as big that you can get at Taco Bell, which I don't go to. But I'm like, they're these giant burritos, and they're like they're not even 99 cents. They're literally $1. I'm like, oh my God. They have spicy, and they have cheesy, and they have the, and they're chimichanga, and I fill the whole cart. I don't go there very often. When I'm there, I'm always amazed of what you can find at Walmart. So anyways, I buy all these burritos and stuff. Anyways, I can't even remember what the hell I was doing at a Walmart. I was looking for something. Oh, a heater. I wanted an outdoor heater. Anyways, so I'm pushing the cart through the aisles, and I get to the electronics area, and they had a 70-inch 4K TV for like $400. I couldn't believe it. I'm like, holy crap, that's unbelievable. 70-inch 4K TV for like $398. Like, unbelievable. But if you were about to lose your job, or you're living on fumes, right? Like you've lost your job, you haven't worked for 3 months, and you're dwindling out of money. Even if that's a good deal, you don't buy it. You just don't have any money, right? So here's what I'm getting to. When you're worried about now, but even more importantly, you're worried about the future, because you could be not worried about right now. You could be sitting pretty. But for some reason, you have a negative view of the near future. You might lose your job. Okay? Therefore, it changes your behavior. You don't buy the TV. Okay. So if we have less bad numbers, because remember, the newspaper will say, oh my God, last month it was 63 billion. Now it's 64 billion. That is just so horrible. The trade balance is crazy. America's going to go bankrupt. America's going to go broke. Now you think about it, like, dude, sorry, Mr. Newspaper Writer, that doesn't make any sense. See, what's happening is we're buying stuff from foreigners because they're not as rich as we are. Think about it in very simple terms like that. The king doesn't clean his own toilet. Now, that's an exaggeration, but I want you to think about it. Like, if this number is getting more and more negative, we're buying more and more stuff from foreigners. Why? Because we're poor? No, because Americans are rich. And more importantly, they feel good about now and in the future. They feel good. And they're like, you're in Walmart to buy a pair of socks, and you see a 70-inch 4K TV for $398. You weren't even looking for a TV, but you're like, you know what? Throw that in the cart. Okay? Now, of course, it was some off-brand, cheap, TV, but it doesn't matter. You're like, oh, look at that. That's amazingly cheap. Throw it in the cart. You didn't plan for it. You didn't budget for it. You probably don't even need it. Buy it. It's so cheap. Why? Because somebody else somewhere in the world is working for $1 a day. Okay? So for you, it's cheap. You're like, oh my God, look at this. It's crazy. Okay? So the bigger the negative number, like the more bad it is, the gooder it is. Okay? Because you're buying stuff, and you're buying stuff from other people that are willing to work cheap. Compared, remember, Forex is relative compared to you. Okay? So, what happens to the dollar then? If the trade balance is negative because we're importing a lot of stuff, more than we're exporting. That's why it's a negative number. We import more than we export. X minus M. Okay? That's all it is, right? Exports minus imports. Exports, we make money. We're selling to foreigners. Imports, we're buying stuff. And so a negative number means, right, that we import $64 billion more than we export. So we're buying from foreigners more than we're selling to foreigners. Foreigners can't afford American stuff. It's expensive. So if we're importing a TV, then we're exporting dollars. You see that? If we're importing a TV, we're giving them dollars. But in the foreign exchange market, so now FX shows up, okay, the interbanking system, foreign exchange. Well, if you're buying a Samsung, trust me, it wasn't a Samsung. It was, I don't know what brand. So you're buying from China, but let's say South Korea. In the foreign exchange market, there's a new step because South Korea doesn't want your US dollars. So it goes into the FX market and dollars get converted into won. I think it's like that, isn't it? To won. Okay? And so now in the FX market, what are we looking at? Money left America, went into the interbanking system, and got converted into won. Okay? You see this? So now there's less South Korean money because it got converted. So right? We're talking about the interbanking system. So now there's less won. We removed the won, the South Korean currency, from the global market. And it was replaced by US dollar. We converted it. Okay? So Americans sell their dollars, supply increases, and buys South Korean won, supply decreases. And the value of the South Korean won goes up because what demand for this went up and supply for this went up. So if demand goes up, the value goes up. If supply goes up, the value goes down. So, long story short, this, in my humble opinion, even though it's reported as being a horrible thing, I think it's a good thing if you're American. And the bigger the negative number, assuming it's an increase in imports, okay? If we're exporting less and less, then there's a problem with that too, but we're looking at the sort of one side of the equation here. So if we're buying more and more stuff, Americans feel good about their situation and the situation in the near future. And when they feel good, they spend money. And when they spend money, they like cheap stuff. Cheaper the better. Okay? And when that happens, the dollar weakens. Why? The dollar weakens because things are bad. Remember, you'll read about the dollar weakening, right? A negative dollar is bad. You probably read about this every day. And the trade deficit, right? The trade deficit with China, the trade deficit with Japan is bad, right? Do you guys hear that, or does that not occur anymore? It definitely used to happen. I don't really participate in mass media. I haven't in years. But do you guys hear that? Yes or no? That a weak dollar is bad? That a negative trade balance is bad? Is that what you hear? Talk to me, Goose. Oh, Reb says all the TVs are priced at the stimulus check price. Oh, that's interesting. Yeah, good. Interesting. A few people say yes. Make sure you're telling me the God honest truth. Not that you're lying, but don't just sort of back me up. I need to know because I don't watch mass media. That's the message that used to occur. Okay? But I'm talking, the last time I read that, we were talking about Japan, not about China. Like, think about this. 20 years ago, we weren't worried about China. They were making shoes and luggage. Like, who cares, right? They made T-shirts. Who cares? Now they make, expensive stuff. But I look at this negative trade balance. It's because we're richer than everybody else. So sure, why would you do it yourself? It doesn't make sense. Okay? Why do foreigners like to move to the United States? Typically, there's better work, more money. Okay? All right. So anyways, I want to see a negative trade balance. And if so, I'm going to sell the dollar. And that's a good thing. Gary doesn't follow the news. If I lived on a remote island, I don't think I'd want to follow the news either. There must be an us versus them mentality. I don't know if that's true, Gary, but I think of sitting on a beach in Nevis, right? So, and I'm like, you could sit there, and the whole world could go through all their drama. And you could just not even notice. And then you realize, well, that's why it's awesome. That's how I'd probably. But then after a while, you're probably like, what's going on? What's going on out there? I got to get off this rock. But so. Negative is good for me, and it fits my investment thesis. Okay. All right. Kevin has a monetary policy question. Go through the fundamentals course at FX Bootcamp. Just do the whole thing over again and try to figure it out. What is it that they're trying to do? Support the economy or cool it off? Heat it up or cool it off? That'll tell you right off the bat the general strategy. And then you can interpret the language that they're using. Ample reserve regime. Well, what the hell does that mean? Okay, well, ample doesn't mean smaller, right? and the regime is a strategy. So reserves, like what do they mean by that? Well, figure it out. You have to, right? You have to go with the basis first, because the language is not necessarily that important. You have to understand, once you know the strategy, you can use different language to describe the strategy, but you have to understand what their intent is first, right? BBC World News. Yeah, that's actually a pretty good one. I haven't listened to it in years. But now you cut that off. Yeah, okay, yeah. Oh, is that right? Greg says today is Wayne's 6th year anniversary of making webinars for Traders Way. Really? Cool. Very neat. Yeah, Kevin, yeah, you tend to, yeah, and I know you are, and I'm not shooting you down. I'm just saying, you want to understand that first, and then you can interpret their language anyway, right? It's almost silly language. They're trying to confuse all the journalist majors that cover the Fed with gobbledygook economic terms. Anyways, and then non-farm payrolls on Friday. Okay. And kitty cat payrolls as well. Nice, right? All right. So what is missing on this calendar besides ISM services? Something that is very important. In fact, it's more important than non-farm payrolls, and they didn't even put it on the calendar. What is missing? The most important thing going on this week is not even on the calendar. Rook says, hey, the inflation rate. The Fed has already told us they're not likely to adjust interest rates for years and years and years, so that wouldn't be the answer. Tax season? Nope, that already occurred. That's already happened. Monetary policy, once again, that ain't going to change for years and years and years. Yeah, the election here in Georgia. If Republicans lose, so there's two votes going on, right? There's two senators. Now, I think it's highly unusual that you're voting for two senators at the same time because they like to avoid the situation we're in. But if Democrats win both Senate elections, both Democratic candidates win, then it changes absolutely everything for the next 4 years in the United States of America. Huh. That sounds interesting, doesn't it? If both Democrat candidates beat Republican candidates, and let me tell you, they have a good shot at it, for sure. If both Democratic candidates win, then the Democrats control the White House, the Senate, and the Congress. Oh my God. Made us say in 2 years because, yeah, that's true. So anyways, it changes everything. It changes what can be done and how it can be done. Okay. Wowzer. And you say, well, why does that matter? We don't trade politics. No, but we trade policy. Okay? It changes policy. And policy changes things like government spending and governmental relationships with our trading partners and our adversaries. Okay? It impacts money. Let's just put it that way. Okay? At the very least, what do we know? Gross domestic product is equal to C plus I plus G. Okay? If we were a closed economy, that's all there would be. All right? But we also know X minus M. So we already talked about X minus M today. Great. So, depending on who controls, if the Republicans controlled everything, if the Democrats control everything, or if there's a balance between policies, it impacts G. At the bare minimum, it impacts G. Now, it could also influence X minus M. So when Trump went into a trade war with China, they impacted X minus M. Changes the flow of money. Well, that's what we do, yo. We trade money flow. Okay, government spending now. So there's a budget, right? The government comes in and they have a budget every year, annual budget. And then that dictates spending. Great. But then when you do a stimulus, you're spending more than what you had budgeted for. Okay? So, therefore, you would be increasing G, and that impacts other things. Like maybe the government's trying to influence business investing. Maybe the government's trying to influence consumer spending. Okay? And part of the government is the Fed. So when after the year 2000, right, what happened to the stock market? It dropped by 80%. Dot-com bomb, right? Trust me, I was there. So the Fed lowered interest rates to historic lows. What happened? Did consumption go up quickly? Modestly. But everyone in their stupid dogfood.com jobs, right? These 20-year-olds that were vice president of marketing making $800,000 a year, never graduated college. You're like, you're the vice president of marketing? You're like a high school kid. You don't even shave yet. And you make $800,000 a year? Why? Well, I'm senior vice president. You're like, oh my God. So all those idiots lost their job. And the funny thing is, those kids were turning down jobs where they were only senior marketers, only making $500,000 a year. Because they're like, I'm a vice president. You're like, you're a child. Anyways, so those guys lost all their jobs. But where did the money go after the dot-com crash? What was the next bubble? You guys probably weren't even there. Housing, investment. Okay? You don't buy a house like a TV. You invest into a home. Mortgage-backed securities and stuff. Yeah, well, not your average Joe. Okay? So I went up. Okay? So the policies matter. Okay? Who runs the White House? Who runs the Senate? Who runs Congress? Because Congress writes the law. Then it gets sent to the Senate to confirm it, let's say. It's a check and balance. Okay? It's a check and balance. Now, the interesting thing is there's hundreds and hundreds and hundreds of lawmakers. California has a boatload of representatives in Congress. Right? And Maine has hardly anybody because it's such a tiny thing. However, every state in the United States has 2 senators. So the little tiny state of Maine, or what's another good one? Vermont. Okay. Vermont, West Virginia. They have the same power as New York and California. Rhode Island has the same power as California. And if they don't like the laws coming through, they reject it. Okay? Yeah, you have to smile about me, myself, and Irene. I'm like, what a strange movie. Okay? And then if it passes the Senate, then it goes to the prez. Okay? So what we're talking about now is this power here. If both Democrat representatives or candidates, I should say, if they both win and they get 2 more senators because then the Democrats will have enough power so that the Democratic Congress, which they can control, could send much more, let's say, liberal or progressive laws, right, which at this point are just proposed, to the Senate, and they would have enough votes where if they hustled, they can push almost anything through. Every Republican can vote against it, and they would still be able to pass it to the president, and the president just happens to be on this team and this team. So all of a sudden, there's no check and balance. Very, very little check and balance. Their own party would have to act as a check and balance. Okay? If there's a split, there's a much greater check and balance. Okay? There's still ways to do it, by the way. I'm trying to think of the words, but I'm not a poli-sci major. There's a way to push certain things through budgeting and committee, and there's still a way to do things. Okay? Okay? But there's still enough check and balance. And really, it should work this way, in my opinion. Excuse me, in my opinion. The Senate is supposed to be the check and balance. So if you get something radical here, they're like, send it back, temper it down. Okay? Then they take a little bit out, and they're like, no, clean it up, take a little less radical, and then it goes to the president. Okay? That's what they're supposed to do. So you should have something, okay? You should have something. There should be some power. Otherwise, what happens is half of America, right, 50% of America, tells what the other 50% how to live. That's not cool, right? So there should be some check and balance. That's how it was intended to work. Okay. So, long story short, it matters. Okay? It matters. That's it. It just matters because it'll impact, for example, policy on spending, policy on trade. Okay? Yeah, Obamacare. Yeah, our experience, like the McDonald household, is part of that because I'm an entrepreneur. I don't work for a corporation. I don't have your normal health insurance and all that kind of stuff, right? So we had to go through that, and it was an absolute total nightmare when they rolled out Obamacare. For us personally, it was unbelievably bad. It took months and months of horrid experience. And ultimately, we were spending thousands of dollars, quite frankly, for shitty insurance that covered nothing. Right? Thousands of dollars a month, yo. So, yeah, it was pretty bad. Pretty bad. All right, cool. So, hopefully, especially for non-Americans, hopefully I got your head screwed on straight. We're looking at not politics, but the flow of money. And the flow of money can be affected by politics. Okay? Cool. So, yen sideways, dollar still weak. All right. Let's take a look at commodities. Okay? What do we know here? Talk to me, Goose. Okay. We're on a 5-minute chart. This is how I've taught you how to trade. At the London Open, were we high or low? Was price high or low at the London Open? By the way, can you click the like button for me? Will you please tell YouTube this is quality content? I'd appreciate that. Thank you. Okay, a few people say hi. I don't know what everyone else is doing, but thank you for responding. Okay, cool. So do you buy high or do you sell high? Keep them separated. Bum 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 biddy bee, buddy 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 dum bum 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 bum. Wow, 2 people logged out. They're like, I'm not going to click like, I'm just going to bail. Wow, really? It really sucked that bad? I guess you're getting caught up on politics. They want to trade. Well, I've already taught you how to do this, so let's just be focused. That's obviously a sell. You don't buy high, you sell high. On the market open. It's not that complicated. Cool. What time of day have I taught you to trade oil if you're trading the New York session? Because that's probably more of a Brent sell than a WTI sell. So I'd look at that as Brent, but it's all the same. Remember, this is a 5-minute chart, so we're scalping here. Okay? So you sell high, not complicated. So what time have I taught you? The video is probably from 3 weeks ago. And it is 14, there, right there. Okay, right here. $1400 server time. Okay. Okay, great. Is that a buy or a sell? Oh, Cave says you saw me on TV when I was bitching about the Dodd-Frank. Yeah. Yeah, that's a buy. This is a buy. This is a sell. Remember, we're not talking about fundamentals now. We're scoping. We're scalping the market open. That's a sell. Why? Its price is high. You can't buy a high price. And down here, the price is low. Based on time of day, TOD, you buy low or you sell high. You're like, well, Wayne, that's not complicated enough. I know, I'm sorry. I wish I could make it more complicated for you. Okay? Now, the next question is, what is the direction of the trend? That's a silly little 5-minute chart, right? Okay? Well, the trend has been up, and you can see this is the regression study here. And these are all market opens, not all of them, but many of the market opens where you buy low, sell high, buy low, sell high, all this kind of stuff. So I've taught you, right? No, that's all right, Jim. I know you know. Okay. So the next part of this, because you have to ask yourself, do you want to trade every open or do you want to trade a bias? Are you just trading the open? Are you just scalping? And by just scalping, I say, well, most of these look like generally speaking, it just looks up, doesn't it? So one could conclude that every day you're just looking to buy, which I prefer to teach. But of course, you can trade any way you want, right? There are definitely selling opportunities in this time frame. That's just since October, right? Can you see that there are selling opportunities since October? But how do those, from this point of view, does that look like the best way to make money? I mean, it definitely is an opportunity, right? Let's take a look at some of these opportunities. There's, right, selling momentum, selling momentum, selling momentum, selling momentum, selling momentum. Okay. Is that the best thing you could be focused on? Okay. Or could you be focused more on the up? Because you could just ignore this, right? You can just ignore this one, depending on the time frame you're trading. So there's no right or wrong way. It's how much money you make over the volatility in your portfolio. We look at that as Sharpe ratio. How much risk is in your portfolio? FT9 says, how do you know it's high or low? Well, you have to have a base. Okay? Your base could be the day. So let's say, let's do it this way. Let's go back to the 5-minute chart. What's the base? Okay? The base right here that I have on this chart, let me write it out for you. This is the daily buy zone. So what direction am I thinking in general for oil based on the chart setup that I'm using? Remember, I have the setup. This is a regression channel that's showing me trend. This is a daily buy zone that tells me the projected bottom, right? This means projected, it's not actually projected bottom. The best price if you were to buy as a bull. This is all set up as a bull. I only have bullish tools here. I'm looking at a bullish trend. I'm using bullish daily pivots. They're actually biased pivots, so I have it set up for a bull, right? So when you're up here on the London Open, is that high or low? Well, it's nowhere near my buy zone, so it can't be a buy. I want to buy down here at 48. The heck am I going to do at 50? This is 49 and a half. 49 and a half? Well, like, I'm not going to buy it up there. That's stupid. I want to buy it down at 48. You see? So based on my analysis, it's overbought. It's way too expensive. And so I think about all the London boys, and this comes out of my day trading course, by the way. Anyone that's gone through FX Boot Camp has taken the day trading course, which is multiple videos. And in the day trading course, we talk about the idea, the mindset of the traders entering the market. So let's say you knew everything I know. Okay? And you walk into your office in Mayfair. Is that where? That's where the hedge funds are, right? Mayfair or no? Or is it the old city? Anyways, you walk into your London office. And you have your cup of tea. And you open up your chart and you see price up here. Yeah, that's where my cigar bar is. Right next to the Ritz, actually. The London Ritz. I'll meet you at the Ritz. Okay. So you see this, and you're a scalper. You just see it's overbought. You see? You log in, you're like, oh, look at this, 49.50. And the decision's done already. Why? Because you know what is cheap and what is expensive. You sell high. That's it. I know you want it to be more complicated than that. But you're looking for your first trade of the day at the London Open. You're like, oh my God. Oil's opening up hot. I'm going to take this downtown. And it's done. Okay? Cool. Then the New York boys come in. They don't drink tea. They drink chai, dirty chai tea lattes. Okay? With organic whole milk. And they're like, oh, look at this. I want to buy it around 48. Okay? And what does everybody else do? Mediocrity. It's just a trade. Okay? It's just a trade. Now, what if you had a filter? Based on what I showed you on the daily chart, would you want to be generally bearish or generally bullish? Based on the daily. Where do you think you would do best? So therefore, what a filter says is you ignore this one and you buy this one. That's all. Okay? And what you're trying to do is be wrong less often. I don't think being right more is the way. Okay? So if you have less losses and more consistent wins, your volatility falls. Okay? And you, generally speaking, do better anyways. Okay? Now, you have a bit of a challenge with this because you know there's way more to this than technical analysis. technical analysis is good, but it's not everything. So the other thing going on right now is we do have an OPEC meeting today. And they just might. So now you have to know there's an OPEC meeting. The second thing is you're expecting what, a 500,000 barrel a day increase? A 5 million barrel a month increase? Which one? No increase? Cut? What are you expecting? Well, your answer to that would predicate whether you want to buy or sell. What if you expected today that OPEC is going to announce an increase in oil production by 5 million barrels a day? What's your best guess that will happen in the oil market? What will happen to oil, the price of oil, if OPEC today announces a 5 million barrel increase in production by the OPEC members? What happens to the price of oil? So if you had that level of knowledge, how would you have traded today? Well, you would have said, London boys had this right, and you're looking to sell a role reversal because we're going to drop below $48 today. Why? Because you believe, based on your fundamental analysis of the energy complex, an increase of production by 5 million barrels a day. And price is going to work its way down to 45. So you're selling right here below 49 on a roll reversal, and we're going to be down here by the end of the day. So London had it right. But see, you might not be doing any of this. And that's my concern. How many people here agree that this type of knowledge is helpful as a trader? That you should have this level of knowledge. Because it makes it easier, right? You have an investment thesis based on your analysis. Right? Dr. H says, of course, but we know most people here don't do it. Even the ones they know should be doing it still don't do it. And that's the peculiar part, right? And I think if you traded without this level of knowledge, I don't think you'd have any confidence. Which is another way of saying you have fear. If you lack confidence, then you're fearful. And yesterday, by the way, my swing trading group met on a Sunday evening to set up trades for this week. One of the things we talked about is fear. And I said, do you think any professional basketball player would have fear of playing one-on-one against me? An overweight, middle-aged, white boy with a dad bod? I'm like, well, what if we up the stakes? I'll bet you $10 million I can beat you. One-on-one playing basketball. Me versus an NBA player. Ooh, that's a lot of money. Do you think the NBA player would be afraid of playing basketball against me? Someone that's been playing basketball for 30 years of their 30, right, or 25 years of their 30-year life? Do you think they're confident because they've been playing basketball their whole life, that they've been coached, that they can hustle on the street, that they're a professional player, they play against the best, they're also 1.5 feet taller than me, and do you think they know that I can't jump? I have my vertical looks like that. I can touch the top of the doorways if I try, right? Now, why is that? Well, they're clearly prepared, and their confidence comes from their experience. Right? So if you don't have confidence, then you have fear. And your confidence has to come from preparation. Prep plus experience. That you've been here before. Okay? That you have the skills, that you are prepared and you're capable. Yeah, Peter's like, 10 million, let's make it 100 million. I don't have 100 million. Even most basketball players don't have 100 million. But they would borrow it. Someone would loan them the money, I'm telling you. Right? Elon Musk goes up to an NBA player and says, I'll bet you $1 billion I can beat you one-on-one playing basketball. First one to 21. Dude, that NBA player would be scrambling to borrow the money. And lots of people would lend him the money. So anyways, even if Elon Musk was good at basketball, I don't think an NBA player would hesitate. Why? They are prepared. They spent their whole life playing basketball. And they have the experience. That's where the confidence comes from. Okay? So what are you doing to remove your fear? And it comes from the preparation and your experience of being able to have control, right? Because you have the experience of doing research, making decisions, and you know how and when and why to pull the trigger. You're not afraid. You'd be surprised if you lost money. Okay, Gordon says he's just looking at the opening notes from the OPEC Secretary General. That's what you need to be doing. Do you see that? At least you can talk with a potential client and say, I was reading the statement released by the Secretary General of OPEC. And I follow that because, yes, I do trade the energy complex. But it is also a great canary in the coal mine for measuring global macroeconomics. And I was looking for evidence to see if their increase in oil supply had to do with the need of OPEC countries simply to keep their governments afloat, or if there was true demand globally for energy, being a sign of China turning the factories back on because Americans are buying stuff again. And if that's true, then that sets me up with a whole bunch of trading ideas. I could be selling US dollar. I could be selling Japanese yen. I could be selling Swiss franc. I could be buying Canadian dollar. I could be buying Norwegian krone. I could be buying Australian dollar. I could be buying New Zealand dollar. I could be buying South African rand. I could be buying Brent and WTI. I can be buying Bitcoin. All of a sudden you got all these different ideas. Why? Well, you can say my particular alpha includes my analysis of what OPEC sees over the next 12 to 24 months in global demand. But also I was reading the Fed meeting minutes, and this is what the Fed said. Blah, 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 blah. And I was looking at import-export data from Australia, which shows an increase in demand for iron ore from China. Why? Well, the Chinese lockdown is over, and they realize that they've dwindled through their own supplies of steel, and they need new iron ore. So they're going. My research tells me there's going to be an increase in demand for Australia iron ore, one of their two major exports. Iron ore and coal are the two largest exports from Australia. So my analysis tells me China's going to need some iron ore and coal. So I'm going to front run that analysis, and I'm going to be buying the Aussie dollar to take advantage of this increase in demand from China. Well, where's the increase in demand coming from for China? Well, maybe stimulus checks from the United States. Maybe the perceived trough in the COVID-19 economic crisis. All of a sudden, you got all these trades based on like a thought process. And that's what I'm trying to inspire you to do. Okay? Or you show up and you're like, what's going on today, fellas? What's going on with oil? I don't want you to think that way. Yeah, Gabe's like, that's not hindsight trading. Yeah. Yeah, Starbucks caramel macchiato. Ugh. Yeah, I had a Starbucks dirty chai tea latte just like 2 or 3 days ago. And I'm like, this is not what you'd find in India. Chai masala? You're like, what? At least I don't think so. My wife said, do you like it? I'm like, it tastes like a Christmas potpourri. Like, it smells like a stinky old thing that people put in their bathrooms. And for some reason, this one is around Christmas time. So it's like cinnamon and candy cane or something. It was really bad. Like, this coffee tastes like a candy cane. That's not chai. But maybe it is. Like, oh my God. You guys looking forward to 2021? It's going to be epic, huh? I want you to really make it a breakthrough. There's a lot of people in this room right now where 2020 was either the best or the best learning experience, either the best profitable year or the best recovery, like most improved year ever. But I want you to make it the year you gain confidence, that you are doing the right things, you are thinking the right way, that you are becoming independent. It's not me setting the ball up on the tee every day, but you are starting to get it. The hammers, right, are clicking. I want you to be the trader that you are envisioned being, but I want you to make this the year where you really are preparing to be independent. Okay? There are people here right now working on their professional track record. Like, they're not trying anymore, they're doing. They made the commitment, they signed up, they funded the account, and they are trading while people are watching. Real money, developing a real track record. And it's not about make as many pips as you possibly can. That's not a business plan. I don't think there's any company on the S&P 500 that says, We're just trying to make as much money as we possibly can. Well, what's your plan? I don't know, but we're doing our best. Okay? There's financial and business plans. So when you're in a situation where you're like, okay, this is real now. This is real money. I'm not just sitting down every day trying to make as much money as possible. I'm actually sitting down every day doing analysis, creating plans, and I have an expected return for this month. Right? I am trying to make $1,500, let's say. Why? That isn't a target percentage-wise. You're like, well, that's not a lot of money. No, but that's not the issue. If you're only making $1,500 a month trading, it's because you don't have much money in your account. Okay? Percentage-wise, let's say that's 3% of your account. Well, if it was $3 billion, if you had $1 billion in your account and you're making 3% a month, trust me, you're smiling ear to ear. Okay? So what matters? It doesn't matter that you're broke now. You got $5,000 in an account. That's it? Okay, well, that's a problem. But trading wildly your first year is not the solution. Okay? You need to fix a problem that you don't have any money. Okay? But if you can consistently produce 3 to 5% a month for long periods of time with low drawdowns, which is your form of volatility, then I think it matters that you're one of the greatest traders on earth. And people will help you. They'll say, oh, I see you don't got much money. But there are plenty of people that have plenty of money. Okay? Yeah, and then Reb says turning rich into wealth. Yes, very, very important. Yeah, HK says, is having more than 3%. I said 3 to 5. Now, inside of that, there's also seasonality. There are times in the month, or in the year, I should say, that you might make 10%. Okay? There are other times in the year you might make 1%. It's not that you traded poorly. We call that the beta. The market in general didn't perform, so how could you overperform? The only answer to that is you overtraded. Generally speaking, that means you're over leveraged. If nothing happened but you're up 12%, a professional investor is going to try to figure out, well, how the heck did you make 12% return for a month during July? When the market, the beta, did 0. So where did your alpha come from? Oh, well, you loaded the boat and you bet. Well, now you're dead in the water. No one will ever invest with someone that gambles with money. There's no wealthy person or institutional investor that is going to invest into you when you're a degenerate gambler. So now your alpha must match the beta. And trust me, very sophisticated investors know when the beta is bad. They don't look at your overall returns. They don't look at how much money you make, what your internal rate of return is. They go to a period that they already know of. Like they might know a day, for example. They might have a day or a week. They're like, we know from our previous investments that in 2017, let's say, I'm picking a random day, around the Fed meeting in June of 2017, we had investments in various products. A Forex product, a long, short hedge fund equity, right? A commodity, a currency, right? So you had multiple investments in multiple different firms, okay? So like 3, 4, 5 different hedge funds. Okay, great. And during that week, the Fed said something, and the market went ape crazy. And they know that, let's say there was over a very short period of time, there was a 5% drawdown on average, depending on all these asset classes. Everything behaved poorly because the market, for a small amount of time, misinterpreted what the Fed said. Okay, you following me? Like, they know this already happened to them, and it was important, but they understand which asset class was more volatile, okay? And so now they've had this experience, and they say, oh, okay, HK, how did you perform during this period? Because we're going to take the time when things were not good, when there was high volatility, both high and low, which is true volatility, because of misinterpretation of what the Fed said. How did you handle this situation? Okay? And they'll look at what you did. I think a very unsophisticated investor would simply look at your return. How much money did you make last year? It's not the question. That's not the question. How did you perform relative to something? And based on that, how much risk is associated with what you did? Much different. So I want you to say, generally speaking, you're looking for 3 to 5% a month. Okay? When you approach 6% a month, what is your return on an annualized basis? If you're doing 6% a month, for a lot of people, it doesn't sound like a lot. If you're averaging 6% return per month, what's your annualized rate of return? 100%. Okay. We just had the most amazing stock market rally in like 50 years. Okay? That means the S&P 500 is up 30%. And you show up, you're like, you should invest into me. I'm averaging 100%. What's the first thing that's going to cross their mind? Well, how the hell did you do that? Okay? The answer that they must discover on their own should be, you did it without increase in risk. And you might find, though, that that's too much, or at least more than enough. If you made 50 or 60%, okay, the stock market returned 30%, greatest year in 30 years, and you doubled that. Is that enough to attract an investor? You doubled the benchmark. Do you need to do more than double? What it tells you is you can actually lower your lot size, because you don't need to be 200% of the S&P 500 to attract someone to invest into you instead of the S&P 500. And I want you to think about this. The S&P 500 is already very, very, very expensive. And there are lots of investors that have already made big money in the S&P 500. And based on balance, portfolio balancing, they are required by mandate, their own mandate, but by mandate, by a contract between them and their clients, to cash out of some of the positions in the S&P 500 and invest it somewhere else. And now you come along. And they're like, well, I got to do something with the money. And you show up and you're like, well, I'm doing really well too. And I can do it with low volatility, consistent returns. I even earn an income on the swaps. What do you think they say now? Really? Okay. And now you're best friends. So there's so much more than I can make a lot of money. Okay? I'm telling you, rich people don't think that way. People with money don't think that way. So you need to train yourself not to have a poverty mindset. Okay? It's not going to be helpful. Right? Cool. So hopefully in 2021, you will be focused on developing the right kind of track record and building confidence based on consistency and your ability to actually create value. What is your value? Is it trading? No, your value is your analysis that creates a strategy that, first of all, makes sense, and you have the capacity in your skill set to carry out the strategy on behalf of somebody else. Okay? Okay? And it can be simple, like, let me simplify all of this. Okay? You notice a drop, you notice a pullback, you know the 382, you know the 4-hour 21, and you sold here a few days after the election. And now you're making 600% return based on how much interest South Africa is paying you for the loan you gave them. And you're done. That was your skill set. If you recall, before the election, I said, number one, if Trump wins, what happens to the stock market? Okay. Now, if we're using that to interpret risk on or risk off, right? Jim says it goes up. Correct. Is that indicative of a risk on attitude or a risk off attitude? Okay, now translate that into something. Risk on or risk off? Which, by the way, if you're like, well, what's risk on? You're willing to deploy capital because you are confident on making money. You're not hiding your money. You're deploying capital. You're investing. You're putting money to work. And your reward is a function of risk. The more risk you take, the more reward you're likely to make. Or at least you are willing to take a lot of risk because you think you can make a lot of money. Is truly what it is. Okay. Now, number two, I said, if Biden wins, what happens? Risk on or risk off? Risk on. Now, I explained why maybe 30 or 40 times. This is in a moment of time when America was radically divided. It would be the end of the world if Trump wins. But if Biden wins, it will be the end of the world. People were certain. If Trump wins, it's bad. But if Biden wins, it's bad. Everything's bad. Oh my God. Like, I had friends in California crying that they were so worried about Trump winning. It would be the end of the world. No, I would have made money. But Biden won. Well, I made money anyways. Either way. So I removed myself from that nonsense. And so I very clearly explained how or what my thoughts were and why I thought it. Okay? We even talked about the week that it's likely to happen. Right? That is alpha. How many people would agree that I removed myself from mass media and I simply looked at what has happened in the past? I did research and analysis, filtered that through education and experience, and I came out with what I considered a likely outcome. That's what alpha is. I wasn't counting on some giant blue wave and that's going to mean one thing or communism's right around the corner. Like, remove myself from all of that. And so if you just boiled all that down, risk on, right? I said specifically dollar weakness months and months before any of this. And then I drew this fib for you. And then I drew the roll reversal. Then I at that time it was the 4-hour 21. And I even drew a giant circle. And explained that you're going to earn approximately 600% in interest, just interest-only payments from South Africa to you because you're loaning them money. Plus, you're going to make a boatload of money on the pips. That's it. A boatload on the pips, but only 600%. Think of it as buying a South African bond. Now, why 600%, not 6%? Oh, you're leveraged. And you're like, Wayne, well, I only get 50 to 1 because I'm in the United States. Okay, I'm really sorry. You only make 300% a year. Yeah, that's terrible. Better than what your bank is paying you on your savings account. You see what I mean? So if you put this kind of thought into your trading, you can hold these. One of my challenges for you in early 2020 is I told you I was going to prove to you you are worth more. Does anyone remember that? The early days of a year ago? That you're doing things right. Yeah, you can improve, but you're doing things right. But my goal was to prove to you, you are worth more. You're a better trader than you think you are. But you never let yourself see it. Because it hits 100 pips, and for some reason, fireworks explode in the sky, and you're like, I gotta get out of this. I made 100 pips. Oh my God, I gotta get out. I'm like, let it run. Let it run. Let it go. Let it go. Don't take profit quick anymore. Let it go. Let it go. I don't wear underwear. I don't mind being nay-nay anyways. Wait, that's not how it goes. Anyways, yeah, just let it run, man. Let it go. Don't be so eager to get out. Amateurs tend to be very, very slow at taking losses, but very, very quick at taking profit. Okay? Yeah, Gary says, hey, right, the 0.3%. What if you could get them into carry trades and offer them a higher yield? Okay, but they have to lock in for at least a year, Gary. You'll say, okay, minimum is 100,000 US dollars. Okay? Or Carib dollars if you want, right? 100,000 US dollars. They will be locked into your investment for 365 days. Okay? And what if you said you will provide them a 3% return? Which means now you have to pony up $3,000 in cash, right? Now the cool thing, Gary, is a carry trade would pay for more than that, right? But what if you were allowed, because you're guaranteeing them the 3%. Now, remember, we were talking the other day, you can't guarantee returns and all that. But what if you do it in that way where you structure a product where like I will pay you 3%. Now you better manage your risk, which means you're not allowed to lose. But if you're a professional trader, why would you be losing? I don't even understand the concept, right? But you get to keep 100% beyond that. Okay? Because you're like, dude, I'm making 30, 40% a year doing really slow, low leverage trades, right? That might be interesting. Because now you're simply paying them $3,000 to borrow 100 grand. You can be a bank, Gary, is what I'm telling you. But you better have the collateral to be able to pay for that. So what happens if you lose 10% and you promise them 3, right? So you got to be able to, right, have all that to the side, and you better have risk management and all that kind of stuff, right? Like you got to structure this properly. But you could see if you could do it, you might have to have a kill switch where you're like, okay, you're going to put 13,000 aside. So now if you lose 13,000, you have to stop. And now you can't trade their money anymore because you've lost 10, plus you got the 3 you promised them. So you've lost the 3 right off the bat. So you got to have a kill switch to say, look, if you just screw all this up, then you've lost, $13,000, but you have the kill switch before you go broke, right? So anyways, so you put it aside, you had a shot and you screwed it up. But of course, if you trade properly with low risk, you're going to make a lot more, right? You're going to do well. And it'll do well because you get to keep everything above 3,000. You're like, dude, I can turn this 100K into 125, 130K, maybe 150K, maybe 200K. Okay? This is how banks work, by the way. That's why I bring up the bank. Right? Put in a deposit. Okay? Here's how a bank works. In America, we have something called a certificate of deposit, which says, let's say, right now, you could probably get one for 1% and you'd be locked up for 12 months. Okay? Right now, a 10-year T-note only pays 0.9. So that would be a pretty good certificate of deposit. So if they gave you $100,000, you promised them 1 year later, 12 months later, you'll give them all their money back plus 1%. Okay? So if you issued a structured product like that, now in the bank, you have $100,000 in cash, right? And a $1,000 liability. Asset, liability. So what do you do now as a bank? Trade the heck out of this 100K. But you want as little risk as possible, right? Okay? And so you figure it out. Could you buy a corporate bond that pays 3%? Yeah, you can buy a corporate bond, pays you 3%, you pay them 1%, and you clear 2%, and you don't work for a living. You just made, your net worth goes up by $2,000. As soon as they sign the paper, we want to buy with our $100,000 a certificate of deposit, right? And you're like, nice, sign this piece of paper. Boom, you just made $2,000 and you didn't do anything. Because you take in theirs, right? Then you spend the $100,000 and you buy a corporate bond, pays 3%. So now your cash goes down, but then your assets go up because now you have $100,000 in a bond, but you don't have the $100,000 in cash. And at the end of the year, you'll collect 3% and you'll have to pay them 1%. You earned 200% more than the client. Huh? You ever wonder how like Goldman Sachs or JP Morgan makes like $148 billion in profit a quarter? How do they do it? Okay. They loan you, right? They'll borrow money from you cheap, and then they'll lend it to someone at a profit. How about your trading? Do you think this way? Could you simply be an international financier? Right? The government gives you US dollars almost for free. Europe pays you money to borrow euros. Switzerland pays you money to be a borrower. Pays you money. What if a bank gave you $1 million to buy a house and paid you $10,000 a year for your time? Sounds like a good deal to me. Okay? So maybe, right, there's different things that are going to happen. One, in 2021, you're going to build confidence from preparation and experience. Now, the type of confidence and experience, the type of experience you need is from planning. Your planning brings you confidence. The second thing is you're going to think bigger. Not take big risks, but think bigger. Go for more, let it run longer. But also the idea of your thinking, such as you are an international financier. You are financing South Africa. You're not just throwing down a trade. A trade is a trade is a trade. There's a reason behind what you do. Okay? You don't trade this only because it's an M2. You don't sell this only because it's an M3. What's the reason behind it? Europe is paying you money to borrow euros. And South Africa is desperate to borrow it. Will you please help South Africa? They desperately need euros. Will you please help? You will earn hundreds of % return on investment only on interest payments, which you collect every day, by the way, not annual. You will get 600% if you're leveraged 100 to 1. And it's rough. I always, you have to do your own calculations. But let's say it's 600% annualized, but you get paid on a daily basis. So you get 600% divided by 365 every single day. Okay. Lira is dead. It doesn't even exist as a currency anymore. Sorry, Fambix. Okay. So now there's reasoning behind your trading and your investing. You're an international financier. So I throw that out just because it's a bigger thought than just being a trader. Now, being a trader is fine, but as I showed you, if you could filter out mediocre trades and just be on more better trades and less mediocre or bad trades, your returns will be so much higher, but your confidence will go up and you'll have more control over your trading. And the more control over your trading, the more confident you become. And plus, you have more time to actually do what you're supposed to be doing, like reading the FOMC meeting minutes. Okay? Because you're doing less time staring at mediocre or piss poor trades. You trade less. So let's look at this as a bear. I'm assuming you've taken the fundamentals course and the swing trading course. Here's, right? So let's do that. How many people here have completed my swing trading course? Yes, Femobix. 2 years ago, I made 1,000% return on investment on that lira, and I made 0 pips. 1, 2, 3, 4. How many people have completed? Okay. Wow. Anybody else? Cool. So these people know beyond a shadow of a doubt, okay, that this is a sell, okay, this is a sell, this is a sell, and this is a sell. And they know what day, not just the price, they know the day to actually sell it. The day and the price. I'm not saying it's that easy, but I'm telling you it's not that complicated. So what are you going to do if you don't know these things? How long are you going to stand in the fog? Let me quote the great Jim Morrison. Let me tell you about heartache and the loss of God, wandering, wandering in hopeless night. I better not describe your mindset as a trader. Heartache and the loss of God, the meaning of life, the spirit in you is gone. Trading is like wandering, wandering in hopeless night. Is that really how you trade? You need to change if that's true. There's a reason all of this is happening. And yes, you can talk about it weeks in advance. It's not always right, but it's a basis of trading. So for example, how many weeks did we talk about selling pound yen yesterday? For example. How many weeks? 5 weeks? 10 weeks? 15 weeks? 20 weeks? How many weeks ago did we plan on selling the first trading day of January 2021? I'll tell you, 52 weeks ago, you knew. 52 weeks ago, I told you, in 52 weeks, I'll do it again. And I can tell you, in 2022, I will be buying pound yen. Selling pound yen. I just told you 52 weeks in advance what I'm going to do. Well, hell. I wouldn't call that hopeless night. I call that blue sky. That warm, pleasant feeling with the sun on your skin. It's paradise. Feels so good. Very cool, right? Look, it could have been even more precise. I could have been even better. I could have been 12 pips higher. Like, who cares? Oh, it's so wonderful, isn't it? To have done the research, to have done the thought process, to have pondered and prepared, and then you have an opportunity, and you take a trade, and beautiful. Beautiful. How do you feel? Let me know in the comments then under the recording. It'll be available in a few minutes. Thank you for being a subscriber to the Forex.Today YouTube community. Thank you for being a member of FX Bootcamp. Thank you for being a client of Trader's Way. But let me know what your, dare I say, New Year's resolution is for 2021. Leave it in the comment section below the video. Don't forget to subscribe and like, and I will see you tomorrow. So peace on earth. May the pips be with you. May our profits be above average. Cheers.